what's up folks? This is Faris with TwT, and today, I think it's long overdue, but I'm gonna cover what I can about the market movement that we've been getting lately and do another weekend chart prep, right? Where I basically go over a few momentum tickers, large cap and small cap, to look at for the upcoming week, okay? Kind of help you guys make some money and see what I'm seeing. Now, before we get into it, I haven't been putting out as many on YouTube lately, but I'm about to start ramping the content back up. Make sure you're subscribed to the YouTube channel, okay? On top of that, we have a membership at TradewithTex.com where I put out at least 2 videos a week of educational concepts, more advanced technical stuff for trading, futures, options, common stock, all that. So if you want to try it for a free week, just go to TradewithTex.com/sign up. The link is in the description. And you can see what we're about, okay? Either way, let's talk charts. Let's talk about what tickers I'm looking at next week. So this video is going to cover 4 tickers: the S&P, Amazon, and Tesla, right? 2 of the bigger names here. Natural gas, believe it or not, because we've been making a killing on that lately. And if you don't, you definitely have to watch this video through. And then one more ticker that I'll wait to say at the end because it's a long-term play, but it's a smaller name that I really like, that I'll be looking to buy a lot of this week, okay? Now, first things first for the S&P, the big question, right? Up or down? And we're gonna look at the bigger time frames in just a second. This is the daily chart. It looks super hectic for the S&P 500 futures, right? But you can kind of see what went down last week, right? Actual S&P went down last week on Monday. We got that big dip right here, that horrific candle. Tuesday, Wednesday, Thursday, Friday, mainly bouncing, not really retesting that low, right? A lot of nonsense from the Fed, a lot of headlines that are trying to confuse you about what's really going on. Basically, if we lay this out, right, to kind of answer that up or down question, the traditional sell-off from a market correction actually plays out like this. It doesn't play out like this, though. I know this was a relief bounce, but we've held up for multiple days. We are testing a huge fib that if we reclaim, that will send us back way higher, right? And the moving averages are actually starting to slope back upward. So even though we are very, very overextended on the larger time frames, this is not the traditional sell-off for a correction. However, the card I want to play here is a basic one that we always use for long-term portfolio management. It's something that can apply to short-term stuff too. The 8 EMA, the exponential moving average, or SMA, whichever one you use, is back below the 20, right? Whenever that's the case, so here's the 8, here's the 20. Whenever that's the case, that means there's higher risk and there's a larger likeliness of a big pullback, okay? So no matter what, even if we have this rally, even if the technicals look good in next week for a continuation, we have to be a little bit more cautious until, at the very least, price can stay above that blue line, the 20 SMA. And that's not just my rule. That's a general rule by a lot of technical investors, right? Not by the masses. I'm talking about smart money here. When the 8 crosses below the 20, risk is on, right? We play a little bit safer. When it crosses back above, we can be more comfortable, swing trade consistently, okay? Now, that being said, if we look at the larger time frame for the S&P, we printed a hammer, right? Everybody and their mother knows this candlestick formation. It's arguably the best in my opinion. And this is significant if it's off of a key level. In this case, you see that blue line sloping upward, and we could zoom it out a little bit too. See that blue line sloping upward? We got a hammer off the 20 weekly EMA, which is definitely a big deal here. And more importantly, that usually means we're going to get a nice big follow through. Now, the issue I have with that is that we're at a major level. We'll talk about that in a second. But basically what this means is that if we get any strength above last week's high, that's signaling a big push back up, okay? And that might sound like a common sense thing, but that's not always the case. Like after this candle, if we had seen any strength above that high, we would have not gone long because that's a bearish candlestick formation. This is a bullish one, right? So basically what this weekly is telling us, there are a couple of key areas that I'll outline for those of you that are looking for a bigger move down or a bigger move up. These right here, I'm just going from memory, but this is definitely correct. Right here and here. Basically, these levels, I'm not going to write them all out. You can kind of see the ones that are underlying behind it. These are the more important levels for larger moves, right? If the S&P can get above 43.83, that'll indicate an all-time high, right? If we can get above 44.51, which is the main topic of discussion here, that's the main point I'm trying to make, that I'll get to in a second. If we get above that, we see the push to 44.83, okay? And then for weakness, what you're looking at this week is range, right? That's your idea of making money. That's your go-to. Just playing range over and over. Your goal is not to nail a big move down or a big move up, just to preface that. However, if we see any weakness under 4402, basically 4400, that's enough to spark a retest of this area, which might as well be the low because there's not a whole lot of support here. Okay? So your levels on the weekly time frame, 4402, below that gets pretty ugly. Okay? I know that's not a common method of analysis. I know a lot of people are saying other levels. That's the level that I'm going to use. Under 4402, this is a hideous chart, okay? Because that means we're back below this low. That's a key level in itself. Not a whole lot of support, okay? And then above, again, 4451 is where things get pretty bullish again. And we'll talk about that now a little bit more, and we'll wrap this up for the S&P. So the weekly time frame is a bullish candlestick. We're not out of the woods yet, but that is pretty reassuring. And the daily, again, the moving averages aren't that appealing right now, so you want to make sure you get absolute confirmation before playing. The daily is telling us something slightly different in the sense that we have this huge resistance at 44.51. Those of you that use Fibonacci's, you know why that's such a big deal, okay? And then we have a lot of support basically around 44.22, right? Just to kind of, summarize that. If we break this, the upside is about 35, 36 points here, which is good. That's a lot of upside. If we break this support, we have a ton of downside. So what I'm looking at now for the S&P is this little box that we have formed with the exception of 4402, right? Basically, any accelerated sell-off under 4402 gets pretty ugly. Any strength above 4451 gets my attention for another long up to the 4460s, okay? I know that the daily shows resistance at 4466 before it shows resistance at 4483.5, but what we're doing by mapping out all of these key levels, see, this is a lot. It's a lot of information, 1, 2, 3, 4, 5. But what we're doing is we're creating a game plan, right? Where if we break this, we can't use the weekly time frame target of 4483, but we have a modest one on the way, target 1. Then we'll use target 2 as 4483.5. Okay? So the game plan for this week is actually just a break of the range, right? The range that we have right now. And I'll zoom it in a little bit more to the hourly so you can see it. See this range right here? That's where we're going between this little box. So basically make or break of either of those sides will spark the first play, okay? Fundamentally, I'm being a little bit safe here. I haven't jumped in a ton of plays. I'm just gonna trade to make my money for this week because what's going on with the Fed scares me a little bit. But from a technical perspective, this chart is on the verge of turning bullish again if it gets a little bit more strength, okay? So these are the key levels that I'm going off of. The major resistance is this guy. Oh, sorry, I meant to outline that. This guy in red. And then the major support is this guy in green. So here and here. All right, 2 nearby key levels, and we should be able to break that range this week. So Monday, Tuesday will be a pretty big deal here, okay? And as a little last thing for the S&P before we move on, keep in mind that Friday was an inside candle, right? Those of you that know technicals, you know candlestick formations, you know that that's an indecisive formation. We closed higher, which is bullish, right? But it's inside the full range. So any range expansion above or below that is a big deal, right? You can see 4402s before that, and then 4451 perfectly lines up with the high. So we know exactly what needs to happen to go long. Okay? Now, for the momentum stocks, right? Because everybody and their mother's watching Tesla, everybody and their mother's watching DATS and some of these other social media plays this week. Let's talk about what we do when the markets get like this. We trade in a real boring way. Picture the most boring trading day. Do those habits tenfold, right? Routines, checking hourly time frames, checking your frequent plays. Notice that Amazon was on my list. That's the point that I'm trying to make. Amazon, easily one of the least sexy stocks right now. But when the markets get tricky like this, your goal is to play the boring names repeatedly and just capitalize on the range. So big thing I wanted to point out for Amazon this week, basically if the S&P can get above 44.51, okay, ideally Monday, Tuesday, which I think is pretty laughable, but I would like to see it happen. I think more than likely we're going to pull back low 4400s, right, before we see any retest. But if we could somehow break through that, Amazon has a really nice gap to fill here, 34.19 to 34.60. Okay, again, if these are too advanced concepts for you, fibs, gaps, etc., everybody starts somewhere. Make sure you check out the educational videos on our channel. Okay. But 34.19 to 34.60, we got a nice gap to fill. Not a whole lot of resistance on the way up. Basically, the game plan here is if we see market weakness under 34.19, gonna play the short down to 34.02, which is what we did on Friday. If we could see the continued strength, which is what I'm looking for, right? I'm not saying long or short. Obviously, I'll play both, but I'm looking at the long side. Then our big target's gonna be 34.60. Okay. And from there, we just get out of the trade and we'll revisit later if it sets up again. Okay. So Amazon looking for the push, 34.19, 34.60. And just so you know where the support is at below, it's 34.02. Okay. Don't go with the masses and just say, oh, the S&P resistance and support are at 4,400 and 4,500. Or the Amazon support is at 3,400. Use the actual historical levels here, right? Don't half-ass it. Make sure you update those. Okay. Double check that they're right. Next ticker here is Tesla, which only issue I have with Tesla is really that it's overextended. A lot of times what we're used to seeing for Tesla is these day one moves resulting in a day two, day three squeeze, right? You can see it here, day one, and then day two, day three squeeze, and again there, right? But this time is a little bit different because in these instances, they were mainly after pullbacks and really aggressive ones. Tesla just consolidated and just broke out of it. So point I'm trying to make, it is overextended. So you have to tread lightly here if you play it. Basically the big targets overhead. We have a fib at 778.55. We have a historical level at 780.79. So both of those pretty close to one another. Take the lower of the two as the first target, right? And then 800.02, basically 800 flat. It's a 2-cent difference. As the next major psychological and historical level. Okay. So for that matter, for Tesla, point I'm making, we have a nice breakout pattern here. Everybody and their mother sees it. It's a little bit overextended, but it should be able to get to 800 within the next week. Problem is really just the S&P and the NASDAQ, right? Those are kind of the looming risks here, what the markets end up doing. So both of these game plans for Amazon and Tesla ideally are played on strength. Tesla, if we're getting follow through, right? $800 easy. If not, if we don't get continued momentum similar to what we saw on Friday with volume, then it's going to be 780 and we'll see a pullback. Okay. But bottom line, it should be able to make the push up. 800 is the big target for the week, right? Just matters whether or not it can get that day two follow through without the markets. Because again, I'm not expecting the markets to be too strong on Monday. Okay. But Tesla, 800 as target two, that's going to be the big magnet within a week. Okay. It's technically 1 to 2 weeks, but I mean, that's a pretty generous target, right? It's not that far off. Okay. Now, last two tickers here, and we'll wrap things up. Natural gas, I wanted to make this point mainly for my members, right? One thing you guys got to know, again, and I want to re-emphasize this, we trade what makes us money in the chat room. So most people don't really trade natural gas. It sounds boring. It's normally boring like 75% of the year, but this has been my top gaining ticker ever, right? Actually, initially when I started trading with charts, most of my money was made on natural gas. It's just a fact that it really listens to the technicals well, right? It goes key level to key level, and it sets up frequently when it starts grooving. This is when it started grooving, right? Exactly a month ago. Recently, we played the short off the highs. We nailed the hell out of it. And now it's rallying aggressively last 2 days. Okay? Now, the thing I wanted to point out here for all the members in the chat, I was talking about natural gas short recently. If it gets above 519, this 50% fib, it's a no-brainer long, right? And you don't have to trade natural gas futures. You can go with the ETF, which you can also play options on, right? You can go with Boyle and Cold for common stock, which are leveraged ETFs, or you can just trade the futures ticker, okay? But bottom line is, for natty gas, it actually recovered a good chunk of this drop, and as we know, when something crosses over the 50% fib, it's almost an instantaneous magnet up to the 61.8% fib, which in this case is up at 530, okay? It's big resistance. So natty gas, the move I'm looking for this week is actually 519 to 530, okay, where we have a ton of resistance. If it can't even get above 519, it's gonna set up for a big short, okay? Reason I'm saying that, look at the weekly chart, right? We actually ended up closing a very bullish candle. So the ideal play here, and the no-brainer really, is 519 to 530. It should actually go more than that. However, if it can't get above 519, that's a big red flag that this was just a mean reversion, right? We just went back to normal, and now we're gonna go back down to the 480s, okay? So 519.3 is the big make or break. Again, 530 is the first target, and that's more than enough distance to make money with ETFs or options or whatever, right? That's a lot of range, okay? So looking for the long this week on natural gas after shorting the hell out of it last week, okay? And the last ticker here is TMC. You guys probably know this one, right? It's a pretty popular social media play. It also got pumped and dumped on social media. If you can't tell, this is one of our members in chat, DCR, he's DCR Charts on Twitter. He had mentioned that this is a prime example of a pump and dump, and it exactly is. You can see the front loading before they start pumping it to their masses. This is when they pumped it, right? Hit a high early, never retested. The thing with this stock is I'm not here to tell you it was a pump. I think a lot of people know that. I'm here to tell you that this is not a bad long-term play. A lot of the baiting that these pumpers did with this stock was based off of potential, right? And how this stock actually has a bright future. And I firmly believe that, right? So I didn't play it up until this point at all. I think maybe I day traded it once, but I didn't really buy or sell it all that much. Now it's looking really appealing down at these prices to start a long-term position. So normally I'm a day trader and swing trader, but a big portion of my income comes from my long-term portfolio, as it should for you guys, right? Wealth building. Basically the next area that I'm looking to start buying some more, 431. Okay, these are already all-time lows, so you have to use different calculations for this. But after I ran the numbers, 431 and anything sub 380 are the ideal buy points for me. Okay, so any continued weakness from TMC this week is a no-brainer at the moment, looking for a bounce back. Okay, and that's how I want to wrap things up here. So I hope you guys have a good Sunday. I hope you guys get ready for the upcoming week. Remember, we have a free weekend chat, and it starts every Monday, right? Technically Sunday night. So if you want to sign up for that, join up with us. We're going to make a killing this week, okay? Just like what we did last week, all right? And more importantly, final note here, trade boring. Don't have fun. Trade the same tickers over and over. It will save you a lot of potential losses this week and keep you real consistent, okay? So trade them wisely, and good luck.